This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
So if we can just get in something that, as long as it's cash flow positive, as long as you're, you're really making sure that, especially with long-term fixed debt, it really looks attractive. So that's one way you really take advantage of inflation, is just, again, using other people's money, lock in a rate that makes sense. And then over time, you're going to see appreciation, as well as, just the future dollars are going to be worth less that you're paying off with.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey, awesome people. Ever wondered how you discovered this show? Was it a tweet? Was it LinkedIn? There's no ads or sponsorships here, just pure passion. So if someone guided you here, do me a favor, pay it forward, share it, review it, spread the word. You rock, and your support is everything. Thanks so much. Hey everyone, it's Augustino. Building realistic success means taking the right calculated risks, adapting to changes, and making hard decisions. Now, in today's economic environment, it's rampant with inflation. The dollar's losing value all the time. It's even more important to understand the financial risks and making sure you're making the right choices, right? Now, our next guest knows all about this. He is a general partner in just about 2,000 units and has raised over $25 million for his multifamily real estate portfolio. Now, he has made helping others achieve passive income his goal. Now, he says they have to love the process of multifamily investing, and that includes buying and running the business even during tough economic times like we're in today. Now, he leads Bronson Equity, hosts the Mailbox Money Show, and is a coach at Kingdom REI. And he's also the author of How to Use Inflation to Your Advantage. So it's safe to say he knows what he's talking about when it comes to investing in times like this, right? With all that, I'd like to welcome my good friend, Bronson Show. Bronson, buddy, thanks for coming on, man.
Hey, Augustino, good to be here, man. Excited to be on the show.
Yeah, good to have you. Good to have you. Now, guys, if you like what Bronson has to say, you can reach him via his contact page at BronsonEquity.com. Okay, Bronson, go ahead and tell the listeners a little bit about your journey.
Awesome. Well, great to be here. I started as a medical sales professional, which meant when I wear scrubs, I would go into surgeries with cardiologists, and I'd talk to them on how to use this heart surgical equipment. It was very interesting. I was getting paid very well. There was just one problem, is I didn't have control over my time. And that's a big problem for high earners, people that work in the medical field especially. They just can't take vacations. And so it's hard. If you don't go to work, you don't get paid. Or if you don't do a procedure, you don't get paid. And so I wanted to be able to have something that allowed me to have flexibility to travel and create. And really, for me, financial freedom really means having enough money coming in passively that it will cover your living expenses, kind of the idea of making money while you sleep, as Warren Buffett would say. So I went deep into that and how to do it. I started with single family. I had a small single family portfolio. Ended up a relative of mine said, hey, why don't you consider multifamily? I said, I'd love to. I don't have the money. He said, you can raise the money. And now 4 or 5 years later, I actually raised close to 40 million now. And we've branched out from, multifamily to go to ATM machine funds and car washes and oil and gas. And so I just love talking with people about passive investing. I've had over 1,500 one-on-one phone calls with high net worth individuals, just learning what's important to them and learning about what their investment goals are. So it's been a lot of fun. I just love what I do, for sure.
That's awesome. Yeah, I didn't know that you're doing the ATM machines. It's funny. I looked at ATM machines a long time ago, and oil. It's funny because I have a friend that's getting into the oil business as well. I mean, very, very different skill sets for each one of those verticals, right? It's not like multifamily. It's not like multifamily at all, right?
Exactly. Yeah, I become more of a fund manager where I invest my own money passively, and I invest passively on what we do at Bronson Equity, but then also, just really figuring out what are the assets that really make sense in this time. Because, sometimes, there's certain assets that look really great. I mean, I think between 2010 and 2021 or first part of 2022, multifamily looked great, and it's become a little more challenging. It's not that it's impossible, you shouldn't do it. It's just that, it looks a little different than it did. And so we've branched out to some other things that just really particularly provide cash flow. I think, a lot of appreciation is great. And we've noticed in multifamily, some of the cash flow for some deals has been more difficult because of expenses, because of interest, because of insurance, because of, these other things that are there. But, with the right deal, obviously it can make sense. But having things that will cash flow every month consistently or every quarter consistently that really aren't correlated to real estate has been attractive as well.
Yeah. I mean, I think that's the biggest thing is that right now, trying to find deal flow, a deal that makes sense anyway, given where we are right now with interest rates, especially because it's I don't think that the market has yet adjusted to that whole thing where at 3% or 3 or 4% or whatever, the assets became a lot more valuable because we're trying to collect that spread. But now the cost of capital has risen so quickly that you got cap rate compression, and trying to make a deal work is very, very tough. Like if you got in before, like you just said, 2020 from leading up to 2020 for that matter, some of our old deals, I mean, we stole those deals, loved those deals, stole them, right? Now can't be done. But there's still people out there transacting. So I guess, we did it. The reason why we did it is for the same reasons that you wrote about in your book. We wanted to protect these little pieces of paper that are called dollars and put into a hard asset that increases in value, right?
Yeah.
Meanwhile, inflation is eating away at these dollars that are getting printed into oblivion. Maybe talk a little bit about that, because I think that for many people, maybe even people are listening, they don't understand the concept of like inflation is it's just thrown around. It's inflation is everything around us in terms of like how governments are spending money, how the cost of goods are going up. I mean, can you talk a little bit about that and why it's important? People need
absolutely.
to be investing in real estate.
It's something, it's a huge issue because one thing we know, I mean, they say the certainties are death and taxes, but unless you're a real estate professional and you can avoid or try to defer taxes, but we know the governments are going to continue to create currency, and we saw it during COVID, we saw it during 2008. In fact, during COVID, between February of 2020 and February of 2022, there was over a 40% increase in the physical and digital currency, meaning money that is physically printed or money in bank accounts or on government. It's insane. So people wonder, why are we having so much inflation? And right now we're recording this, in October, mid-October, they say it's 3.2%. I think it's more like 7.5% still. So, again, the government's not really being honest about what it is, but again, just putting money in a bank, you're just losing money every single month. So to try to find things that can hedge, right? And, a piece of paper, it's only money. It's only has value because we all agree it has value, right? But if they create more and more and more of the stuff, if, there gets to be a loss of confidence in the dollar, any of that, people that own real assets, such as apartments. And that's really the best thing. If you can go from cash to asset to cash flow, that's the best thing, because you're going to hedge, especially with rents, with multifamily. Generally, rents keep pace with inflation. So as inflation rises, rents will generally rise. So that's why, that's why we love, you and I, but we love real estate because it really provides that hedge for us.
Yeah. I mean, I think that's the thing. I mean, I just heard that, I guess this new conflict taking place over in Israel, we're sending all kinds of money over there. So now we're sending money to Israel and the Ukraine. I mean, I'm not turning this into a political discussion or anything else like that, but the point is that all this money is leaving the country and we're paying for it. Individuals here pay for that in the way of taxes, right? So if you put these pieces of paper into a hard asset, like a piece of real estate, you can't just print off real estate on a printing press the way you can with dollars, right? Yeah, so exactly. That's where the real value is. And I think that's the primary reason why these dollars need to be converted into assets that produce cash flow, right? Because then you can spend that money as the asset increases in value. That money, the rents also increase as well. So it really is an amazing way to, like you said before, secure the work that you did to earn these little pieces of the green pieces of paper.
Exactly. Right? Yeah. And it's we'll probably talk about it later, but my book, my ebook, How to Use Inflation to Your Advantage. It talks about real assets, there's all different types. I also do precious metals, which they don't necessarily produce cash. I don't look at it like an investment, but it takes resources to go get them. And so, when it was 1930 and, it was $20, you could actually see on the $20 bill, it said, exchangeable, payable to the bearer in demand in gold. So you could take your $20 bill, slap it on the counter, and they would give you a 1 ounce of gold, which now costs about $2,000. So people don't realize that the currency was actually just a claim check on the physical wealth, which was gold or silver, right? And so that's something that, and there's actually a liquidity component as well now, that if I have, let's say I have, 10K or 100K in gold or silver, if you have it in a vault, third-party vault, you can borrow against the value of it for liquidity. So I'd rather have physical metals and to be able to pull liquidity from it and borrow it at a low rate, usually 8 to 10%, just kind of a HELOC kind of thing. And it allows me to have stuff that's outside of currency. The kind of one thing you were sharing as well is just that another benefit of real estate, or how really to use it to your advantage, is you can use other people's money, or you can use debt to go get an asset, right? So if you have a property, we do multifamily, let's say you get a $10 million building and you put 20% down, it appreciates by 20% up to 12 million. A lot of people think, oh, how much did you increase your equity? Oh, by 20%. Well, no, you actually doubled your equity, right? So it's just amazing. And that's how people become so wealthy, because they're using other people's money. And so it's kind of a double positive, because you're using other people's money, you're using leverage, and these assets are going to be worth more in the future. And so you have a leverage kind of built into that, and you're paying it off with future dollars that are worth less, right? Especially if you have longer term debt on it. So that's why there's so many advantages to it. And that's why if you look at people that are wealthy, just about everybody I know that's become wealthy, it's through real estate. Even Andrew Carnegie, the great, industrialist, he'd said, 100 years ago, 90% of millionaires became so through real estate. I think it's probably still true today.
Yeah. No, hey, listen, that's the reason why people are jumping into the real estate game, right? They're looking for stability. They're looking for those tax benefits. They're looking for a safe harbor when it comes to protecting that effort that it takes to earn those little green pieces of paper. So I couldn't have done it working in corporate. I'll tell you that. I mean, I used to run large enterprise technology and did all that fun stuff. And I thought I was, what an important guy I am. And I realized that none of it matters unless you're doing real estate. So.
Yeah, it's crazy, right? Yeah, it's funny, the things we do, and all the skills are great. Like, you got a lot of skills from that. I got a lot of skills from sales,
Sure.
we get skills from different places. But to be able to actually own assets and to scale wealth, we got to be thinking bigger. We got to think bigger than just doing a job or doing single family or whatever. But it's all mindset, isn't it? It's just like, if you believe you can do it or you learn how to do it, then you're like, oh, I can do this now. Wow, I've raised this much money. It's still shocking to be like, I've raised $35-40 million. Like, that's crazy. Like, never thought I'd say that in my life. It's kind of crazy.
Yeah. Well, yeah. I mean, I remember when I did my first $1.5 million deal, I was like scared to death. It's like, now I won't even look at them anymore. I wouldn't look at $1.5 million deals.
That's too small.
The only deals, the only deals we look at that might be that size are like single tenant net lease type of deals, like, that kind of thing. Right.
Yeah.
But even then, those ones are kind of small, but something you mentioned was precious metals. Now, we don't get into the precious metal stuff on the show, even though I understand the importance of precious metals. I think that this sounds a little conspiracy theory type scenario, but whenever there is, you mentioned it's like $2,000 an ounce. I think it actually might be more than that now. I mean, I haven't checked it recently, but I think last time I saw it was 16. And I think you're right. Yeah. It's like 2 now. It's probably more.
Yeah, I think the spot price is about 1,900, but it's about $2,000, just under $2,000 if you buy an ounce of.
And the reason why, like what I said, 16 was probably 8 months ago, something like that, and now it's closer to 2, is because there is a general loss of confidence in the U.S. dollar, and there's a shift to precious metals, for instance, gold, because there's going to be way more demand, because when, like you said earlier, there's that faith in the U.S. dollar, and the dollar is losing faith, not just here in the States, but globally, right? When we're sending dollars to Israel, to Ukraine, to Pakistan, to everywhere else, like whatever acts this government comes up with, we're outsourcing our inflation. We're sending it overseas, but eventually that money ends up coming back.
Yeah.
Right. And that's why it's like we're very quick to just send money overseas anywhere, as long as it doesn't stay here. That's what I think. I don't know. Yeah. What do you think about that?
Yeah. No, it's true. We do. We export the inflation. They say that of the physical dollars in circulation, over 50% of them are overseas. There are whole countries. There are like over 10 countries that actually fully operate on the U.S. dollar. And that's why there's a number of reasons I think physical cash is not going away, but that's another conversation. But I think precious metals, if you really look at it, there's a great, and I highly recommend anybody listening that's just like, I don't know about this precious metals thing. This is what really changed it for me. There's a guy named Mike Maloney who did a YouTube series called The Hidden Secrets of Money. And
Yeah,
if you watch the first episode, it's 10 episodes. You watch the first one for 25 minutes. It was just like, oh my gosh, I never thought, like, they don't teach this stuff. You're in finance. I went to business school. They don't learn this stuff, but there's a 5,000 year history of metals being money, because it stores value. And typically what happens, you look at the patterns of Rome and these different empires and whatever, they all had, really pure gold, or they had silver, whatever. Then they start spending on public programs. They start spending on military. They start diluting the currency. And then eventually the whole thing got overthrown. And you look at what's happened in the US. We had a gold-backed dollar for, 150 years. And they said, oh, we're not going to allow foreign countries to convert it in the 30s. And in the 1933, they said, well, actually, it kind of mixed up there. 1933, it actually became illegal as a U.S. citizen to own gold. A lot of people don't realize it was actually illegal to own gold between 1933 and 1974. And then in 74 or in the 70s, Nixon took us off the gold standard completely. And so now it's all just fiat. There's nothing anchored to anything in the world. So all these countries of the world are just printing. So I like metals. I like other things. I mean, you can get, other things that are out there that are physical, that are tangible. That's another case for oil. There's another case for farmland. There's a case for people buying, I'm not a doomsday, you could buy bullets, you could buy other things that will have value. They just perpetually will hold value. So as they create more currency, that's one thing we know. I mean, you look at the next 10 years, we're at a $32 trillion stated debt in the U.S., public debt. It's probably at least 150 trillion higher with all the obligations, but the spending is, we're expecting 2.5 trillion a year every single year for the next 10 years. So that takes us another 25 trillion higher just from what we have planned, right? So there's going to be more spending that's going to come from that. So the inflation is, no matter what they say it is, it's not going to stop. Prices are going to keep going up. And so I think there's going to come a point where the public's going to say hey, this just isn't making sense. Let's get into something else. And so that's one of the cases for precious metals.
Hey folks, if you're having a blast, let's take it a notch up. Connect with me on Facebook, Instagram, and YouTube, and all the social media platforms where all the fun is happening. Your feedback is like fuel to us, propelling us to even greater and better content and reach to incredible investors just like you. Thanks for being part of this awesome community, and let's get back to the excitement. But I think that, again, not to sound like a doomsday guy or whatever, the reason that Mike Maloney makes is that at least a gold coin is fungible.
Right.
And that term, for anybody listening, it's like, that means it's tradable. You can trade it. Right. It's got value. It's got real value, right? Because with gold, you could do something with it. With dollars, you can't do anything with it other than buy buildings, I suppose.
Or
maybe
burn it,
right. You print them. That's it, right? So, but that would also imply that those future times are at a time when the U.S. dollar either goes to zero or it's wiped out. And I think that for many people, they think that it can't possibly happen. And again, I don't want to be doomsday guy here, but it's happened many, many, many times before to other countries. I guess there's a belief generally, as this what it sounds like to me anyway, that it can't happen here. It happened in the Roman Empire, happened in Venezuela recently, happened in some of these other countries, right? It can happen. I mean, again, I don't want to be doomsday guy, but I mean, what is your general thought around that? I mean, do you collect gold because you want to make sure that, you'll be able to buy bread down the road or what?
Yeah, I have friends of all genres, all political, investors, all, everybody, and I respect everybody's, they can have their own opinion. That's great. I'm somewhere between the world is going to end tomorrow and everything's going to continue as normal. So I'm kind of like between those two somewhere, which is like, I'm not a doomsday. So something is going to change. Now, if you look historically, I think there's great evidence for, when you get into high levels of debt, you have some sort of, currency that is being used, as a reserve currency, which we are. There's really no good alternative. If there was a good alternative, I'd be more concerned about it. The Chinese currency doesn't, they're manipulate the currency. The euro does not look very strong. So it's yet to be seen what it'll look like. I'm actually a little concerned. The BRICS, there's the BRICS plus 19 other nations that are in conversation about creating some sort of gold-backed or digital, some other type of currency, and they could potentially do it. Typically, though, these things take place over many years. So I'm not concerned that like immediately or tomorrow, all of a sudden, our dollar is going to be worth less or whatever. But, there are periods of time that if politics don't get things under control and we don't go through some austerity, which just means a reduction of spending to like actually a balance of budget, then you get to a hyperinflation type of situation. Those situations are crazy. And it could. I mean, I'm just saying with the way the politics are, it's very difficult for any politician to just say no. And Mike Maloney gets into that as well. But so for me, I think the biggest thing, the reason there's two reasons I really do, a few reasons. One, I do gold and silver because it is insurance. It's insurance against inflation, which I know is going to happen. So it's like insurance I know is going to pay off over time. I don't know when I don't know how it's going to be in fiat currency, how it's going to be valued in dollars. That's one reason. Another reason, it does not have any counterparty risk. And what that means is, like, if I buy a stock or I buy something, if a bank fails, if the company fails, if anything, fails in there. And it's interesting. People say, well, I own physical metals in ETFs. And I say, well, ETFs, it's not as good because there's a counterpart. There's multiple parties involved. They'll typically, JP Morgan will buy one share, or they'll buy 1 ounce of gold and they'll sell at least 20 shares. And they can actually fudge that where they can sell more. So if there's a run on it, who gets paid? Probably nobody, right? So there's so having no counterparty risk. There's a risk potentially if wherever you store it, could it get stolen from a vault or wherever you keep it? It obviously is a risk. But I'm not really much of a doomsday, like, hey, you're going to go use it to buy bread and whatever. I mean, it is a possibility. But if there is a period of high inflation, or what happened between 1974 and 1980 is when the public, we were in a time like this where inflation was going crazy. The price of gold went up 25x, literally 25 times over 6 years. So if that happens, then there's an opportunity, right? You own this stuff, you're into it, you believe in it anyway. The price shoots up. Well, then I would start converting it into housing and other cash flowing assets, right? So it's the idea of just, you have it, you can hedge it. And one of the thought, Mike Maloney, he gives this example of in the video. I actually quote it in my book, my upcoming book. He talks about if you started 100 years ago, you started with a little bit of, you bought one house and then you sold it 10 years later, and then you bought gold and you kind of went back and forth between gold and housing. Eventually, if you just kind of found out when it was the right time to sell either your houses and buy gold or sell your gold and buy houses when things get crazy, you'd have something like $15 million or something from just owning one house 100 years ago. So there's a great, I could talk a lot more about it, but I love gold.
Yeah, I mean, I like gold as well. The only thing I don't like about it, to your point earlier, it doesn't produce cash flow. That's probably the only downside with it. But yes, it's a hedge in terms of like an insurance policy. And I think, to me anyway, it makes sense to get into gold after you've already built up your real estate portfolio, so to speak, right? That's what it makes sense to me. So maybe for the folks that are listening though, they're probably wondering, okay, well, all that's great, Bronson, but how do you use inflation to your advantage when you're buying assets using debt? Like, how do you do that when the interest rates are so high? How do you do it?
Yeah, so there's different ways to do it. I think, if you look at, rates, it's just interesting too. The rates they're saying inflation is 3.2%, but why are interest rates still 6, 7, 8%? Well, if you get a long-term fixed, the amazing part about that is you can sometimes now you're finding, especially in the commercial space, we're finding more deals that actually are starting to pencil, but valuations are getting destroyed, right? Stuff that was bought for 60 million, even after major renovations and looking much better, is worth 36 million. I give examples of that, of like multifamily properties that are just worth way less. So there are some incredible buying opportunities. And ideally, if you were to buy and you have a longer term fixed rate at a higher, at a higher rate, you always have the opportunity to refinance later, right? So you basically, you may not see it as, I'm not really hedging, but if you can just cash flow it, if it's cash flow positive, it makes sense. I'm of the opinion, I don't think that rates will be this high in 2-3 years. I think it will come down, maybe 5, 6, it will come down a little bit to where rates are a little bit better, and then you make a little bit of money on that. But it's a funny time right now in multifamily. I actually wrote this book a little less than a year ago, where rates were a little bit lower, but I still think using other people's money to buy assets that we know over time, especially if you buy right, which I think now there are a lot of opportunities to buy at a great price. So, right, your interest rate can be adjusted later, but your price is fixed, right? So if you can pay less for something with a higher rate and lock it in, you know what your basis is going to be. So as long as your cash flow, you're going to be in good shape. We know these assets, you and I know in 20 years and 10 years and probably 5 years, they're going to be worth significantly more than they're worth now. So if we can just get in something that, as long as it's cash flow positive, as long as you're, you're really making sure that, especially with long-term fixed debt, it really looks attractive. So that's one way you really take advantage of inflation, is just, again, using other people's money, lock in a rate that makes sense. And then over time, you're going to see appreciation, as well as, just the future dollars are going to be worth less that you're paying off with.
That's right. That's a key thing to note too, is that the $100 from 2020 is not $100 today. The $100 from 2020, I think, is what, like in the 80s now, maybe like $85 or something like that, or even less than that. It lost, because it lost 20% of its buying power. People don't seem to understand that part, because, and I say that because not only just the cost of housing has gone up, but everything else has too. So it's, it's based on reality. But given that, trying to get your hands on equity these days. I think you said a bit ago you made 1,400 phone calls, or spoke to 1,400 investors. A lot of investors, man. I'm sure you heard no more than once, right?
Yeah, a few times.
So, but these days it almost appears as though many investors are still sitting on their hands. I mean, retail investors, not so much the Wall Street guys. Retail. Is that primarily who you're going after these days, the retail guys?
Yeah, we do some family office. We do have some larger investors. We've got, several investors that invested over $1 million, but it's, for the most part, it's retail investors. And you're right. I mean, it's most retail investors, when there's any period of uncertainty, or I don't know, there's the war in Israel, or this is going on here, or gas price, the economy, and it's like COVID. There's all these reasons why not to invest. But I think it really, the confused mind will say to wait, when really the best time to invest, looking back historically, is like when the biggest challenges are happening. So I think right now, I think if you can find a deal that's cash flow positive with longer term debt, and it makes sense and it's conservative, I think it's a great time. But a lot of investors have said, I got to talk to one investor a little while ago, and he's like, I'm in 5 capital calls in other deals. There's some pain happening in multifamily. And so, a lot of people say, well, if something, that just means the whole asset is not, it's not going well, whatever. And it's like, well, no, that's probably that's the time to double down and say, well, what do I need to do to really get involved in a deal that, has a lot of upside here?
Yeah, I think that, between that, and also between, I'm not going to call out any of the gurus or whatever, but I'll get some of these what is it, on Facebook, the guys that propagate their deals on Facebook with an 18 or 20% IRR, even in today's market, sounds pretty unbelievable to me these days. Yeah. I mean, that's just me as a guy that does deals all the time, right? And I just, even when times were great, that's what I was targeting, right? Yeah. So, I mean, I'm not looking for you to call anybody out either, but I mean, do you think that kind of stuff is based in reality, or is it just a bunch of hot air, or what do you think about all that?
Yeah, I mean, I've talked to so many investors over the years, and I realized really experienced investors typically will prefer a lower stated return with additional conservative things in there, as well as upside. So a great deal. Instead, I used to think it was, if you got a 20% return projected in Atlanta, it's going to be better than an 18% or 15% or 14, whatever. But I found a lot of people like if you have a 12%, 13% or 10%, whatever it is, but it has here's the 3 things we didn't put in the underwriting, their potential upsides, or we're going to convert this into additional income. We're going to do this over here. We didn't put this in the numbers, but this is kind of what we're seeing as the base case. We say, that's very achievable. They're kind of saying this is an easy base hit kind of thing. And then if it goes well, if we do get some other things, then this could be much better, right? So I think that there's a kind of a rule there in underwriting of just, if you can't look at it just from a distance and be like, this just feels really conservative. Okay, maybe the numbers are a little lower, but I'd rather have, most investors I know would rather have something solid than be anything at risk. You have anything at risk, you're hurting, and it's keeping you up at night maybe.
Yeah. Well, I think that's the key thing, is that the higher the risk, the higher the reward. People heard this comment before, right? This saying, and it's if you're talking about a 20%, then typically it sounds like a high risk deal, right? To me, it's what it sounds like. And it's I'm not taking risk with anything. I don't care how beautiful the pictures are. It's to me, it sounds like a high risk deal. I want nothing to do with it. That's just what I think. That's just what I have to say about it. I mean, it's that to me plays a big role in terms of raising capital, and when it's tough enough to do as it is with a normal deal, let alone trying to do it during inflationary periods like we're seeing right now. So I don't know, just talking about that. Yeah. So anyway, listen, we covered a bunch of stuff here today. I know we talked heavy on inflation too, which is great. And we got into precious metals. One of the things I don't really talk about very often. I don't talk to people outside of in our show here. So I'm glad I got to touch on that with you. So what sort of bulletproof advice would you have to offer for someone that's listening right now in terms of like what to do next in the world of real estate? Having trouble raising capital? Check out my guide that has helped people close millions of dollars. Go to guidetocapital.com and download it today.
Yeah, so really two things that I've used to grow my net worth to 7 figures, 25x my net worth was networking and education. So it doesn't really sound too magical, but they change your life. Getting in the room with amazing people. You're the average of the 5 people you spend the most time with. So if you want to get to the next level, you've got to get with next level people. Second thing is education. I try to read a ton of books. I think last year I read 87 books. I'm at 68 this year or something. My goal is 80. And so, just trying to continue to learn and grow and just find ways to go to the next level. So on that note, wanted to just let people know I have my website, bronsonequity.com. I've got a free download there of how to use inflation to your advantage. Also, I have a new book coming out on Amazon called Fire Yourself. So by the time this episode comes out, it will be available. It's on the shelf here behind me. And just how to quit your job or how to replace your income within 3 years or less through passive income.
Awesome. Well, very good. So guys, if you want to reach out to Bronson, again, check out his website, get that download, bronsonequity.com. Hope you got some insight on how to use inflation to build your future net worth. It's extremely critical now. I'll let you in a little secret. I have insider information. They will not stop printing money. They're going to keep doing it. All right. I promise you it's going to keep going. Don't listen to what the politicians say. The taxes will go up and they're going to keep printing more money. They will do it. All right.
They will.
Get into the real estate game, guys. There's always a deal out there. I promise. There's always a deal out there. Keep your eyes open. All right. Anyway, guys, thank you so much for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.